Pfizer stock is currently up 20.95% in the past 6 months. This is a company that I've been holding for a few years now and I've been down on my position. However, that has recently changed with some news that we're going to go over in this video. Unfortunately, I did lose all my shares. We're going to go over that as well. And we're going to be taking a look at the intrinsic value of this company to see if maybe it's a good idea to add to your investing portfolio. If we take a look here, we can see that I first started buying this company around February of 2023 at $87 and $60 per share, so far off from the current stock price. However, I did keep averaging down on my position because I believed in the company. I'm going to show you some numbers and why I thought at the time this was a good investment. And I kept buying in the 30s, and of course, I kept buying in the 20s as well. Now, my last biggest purchase that I did on Pfizer was on September 8th of this month. As you can see, I bought a total of 25 shares, and this was because one, I wanted to average down on my cost per share, and number two is because I wanted to start selling calls to make some income in calls and also while getting paid dividends, since this position has been down and losing me money since 2023. Of course, you can take a look here are some of the calls that I did, and on this one that I did on expiration October 3rd, which it did expire unfortunately in the money at $27 per share. I had an average cost of $27.28 per share, meaning I lost about 28 cents per share on the 100 shares that I had, losing me about, let's just say, $30. Here, as you can see, the call got assigned. However, I didn't really lose any money because, like I mentioned, I was making money from the dividends. As you can see here, $26.66, and I was also making some money from the calls and selling puts. So I think, let's just say I broke even on this position. Now, the main reason why Pfizer stock has been going up in price recently is because they did a deal with the government and they have some sort of tariff exemption. So they secured a 3-year exemption from pharmaceutical tariffs, and they agreed to offer discounted drugs via the Trump RX platform. So this deal includes $70 billion in investments in the US and manufacturing and research. And of course, this provides a lot of stability and growth for the company. Now, not only that, they also acquired a company called MedSera. I'm sorry if I butchered that name, but they bought him for about $7.3 billion, which this adds promising obesity and cardiometabolic drug candidates to its pipeline. And if you've been following the channel, you know that pharmaceuticals companies, of course, they have to make their sales, but they do grow a lot due to what they have in their pipeline, which is this is very important. And I think that's one of the main reasons why Pfizer is increasing in price. Now, let's go ahead and take a look at the intrinsic value. However, before we do that exactly, let's just take a look at what the average cost for Pfizer currently is. As you can see, this line here is the intrinsic value. And right now, it is expected to be undervalued by 13%. But we're going to go over 3 scenarios, okay? The worst case for Pfizer in terms of the intrinsic value, we're going to go for a base case, sort of like a median, and then we're going to go for the best case possible. Now, here, as you can see, this is why I was buying Pfizer back in 2023. I saw that their sales were increasing, but their share price was decreasing. And I thought to myself, and if you've been following the channel, again, you know that when there's this type of divergence, I like buying companies like this. Because to me, it doesn't make sense. Of course, there's a million metrics to look for in a company. But if a company's making more sales, the share price shouldn't be going down this month. However, afterwards, the sales did start dropping. The EPS, the earnings per share, did start dropping. So I should have probably closed this company at a loss, but I didn't. I wanted to hold on. Pfizer is a huge pharmaceutical company in the US, so I just wanted to sort of weather the storm. And then right now, they've been increasing the EPS as well. Of course, not as if it was in 2022 and 2023, but the share price is now increasing also. So you got to keep that in mind. Again, this is not financial advice. Now, by no means do I think Pfizer is a terrible company. I think they're actually a very good company. As you can see for some financial metrics, their revenue is up 7%, their net income and their free cash flow, it's up 105%. Now, I personally like investing in companies that have a lot more assets and liabilities. This is the case for Pfizer. They have $206 billion in assets and only $117 billion in liabilities. Again, taking a look at the free cash flow margin, currently at 19%. It's dropped a little bit, but again, I mentioned before, they did some acquisitions, so obviously this is gonna go down. They use that cash to hopefully make more sales in the future. And if we take a look at a few more company metrics, sort of like the gross margin and the net margin, it's pretty amazing. I mean, gross margin, anything over 40 is great. That means the company has some moats, they have some competitive advantage. Net margin, I would say 20% is the ideal situation, but 60% is not that far off. It's actually very good as well. Now, this right here, some analysts forecast, this is not the intrinsic value, but they're predicting for the lowest end to be about $24.24 per share, the average cost to be about $29, and the highest forecast will be about $43.56. So keep in mind, this company is no longer going back to the 80s like it was in 2023 when I first bought it, at least not by analyst expectation. Now, something good and some reason why a lot of investors are investing in this company is because of the dividend. As you can see, they currently have a dividend yield of 6.25, paying you about $1.71 per share. So if we go ahead and take a look at that dividend, let's just see how safe it is and how well it's being paid out. As you can see, they've been growing their dividend for 14 years straight. That means that every year for the past 14 years, you've been getting more than what you got last year in dividends. Their 5-year growth rate is not crazy. It's only 3.77%, but this is due to the fact that the current yield is already very high at over 6%. And something that is very good with such a high yield is that their payout ratio is only 50%. Usually when investing in stocks just for the dividend, depending on the metrics that you use to calculate the value, you want to be paying below 80% in payout ratio. This company is only at 50%, which I think is absolutely amazing. Now, to what you've all been waiting for, the intrinsic value for this stock, according to Alpha Spread, which is a very great website that I use to know metrics and find some valuation for companies. The base case is going to be Pfizer is undervalued at 13%, meaning the stock will be worth about $31.38. In the worst case scenario, the stock is overvalued at 13%, making the stock be worth about $23.89. And if we take a look at the best case, it's undervalued at 48%, meaning the stock could be worth about $52.16. Guys, as always, do your due diligence. This is not financial advice. If you enjoyed the video, please leave that like button. Let's get to 500 subscribers. We're very close. Thank you guys so much for watching. I appreciate you so much, and I'll see you in the next video.